Hey guys, this is another look at ES. I'm going to get into the hour chart, but first I want to start on the weekly log scale chart. And I thought it'd be helpful just to look at some previous examples of how these channels traded in a downtrend like this and the gamesmanship that goes on around them. So, quick review. This is the possible structure that's unfolding. At this smaller degree, wave 2, we had this expanded flat, and we may be doing the exact same thing right now at this larger degree, wave 2. And so where this wave C ends is going to be anyone's guess, but we're approaching the top of this channel again, right? And to reiterate, it's really the weekly log scale channel that matters and not the daily uh, linear scale version of it. Although that had got a clean reaction right there, it can't be denied. So, on the linear chart, this is down at like 4115 more or less. And we're still not there on the log scale chart, which is up at around 4145. So it's 30 points higher to go still. But if we look at some previous examples, I mean, this is a great example here coming off of the 2000 high. Um, the channel first looked like this, right? It was drawn through these 2 points, and the third time they came up here, they sort of did this whipsaw. There were a couple of weekly wicks across it, but it more or less held. And so if we extend that down, that original channel, this is where it got interesting because they broke this again, weekly candles. They broke out on a weekly closing basis. They held this weekly close, and then it looked like a successful back test here. And then it looked like a breakout, a back test, and continuation. And then there was a failure. It was still trying to act as support, or they were making it look like it was acting as support. And then they came up. I mean, this was just a tough trade, I imagine. You thought you were in it. They came back up within just a couple points of this previous high, but couldn't get through it and then rolled over. So the game is to make it look like a breakout and a successful back test. It was the game here and it was the game here. And you had to be, I mean, that's tough. That is tough. And so, if I put the channel back where it eventually wound up, the same thing happened more or less up here, right? So the channel originally looked like that, drawn through these 2 points. The third time up, they broke out, weekly close above it. It looked like a successful back test once and twice. And then it was weaker than the 2000 example because they just rolled over from there. But again, that is the game that they play. Weekly close above, everyone says, successful back test, the downtrend is over, and then they just roll over. So it will be interesting to see if history repeats itself with the current example. Um, so that would look like on this chart, we would break above the 50-week moving average right here. We'd have a weekly close above the log version of the channel and then backtest. That's the other thing I wanted to note is that all of this was happening towards the close of the 2001 calendar year. So that, again, the channel was, the original channel was right here. And so we came up, this is the end of the year, and we broke out in end of November and then back tested it in the first and second weeks of December. And then we closed on the high. We went out on the high here, and then it looked like we rolled over immediately in the new year, and then we came back in March. So just an excruciating trade to think you were in it, and then they took most everyone out before rolling over. So this was a process of breaking above the channel in November and then really not rolling over until March, 4 months later. So I think that's worth noting. Uh, this I think is the fractal that possibly mirrors the scenario we're in now. So if I just put this back, is that everything I wanted to say about the weekly chart here? Yeah, I think so. Unlike this instance, which was so easy, I still can't believe it. I think this is going to be tough. You're going to have to attack the trade again and again and again so that you don't get taken out of it. As far as where we are right now, I think this might be easiest to do. I mean, we held this channel today. We whipsawed a few points under it, but I think this might be easiest to do on the hourly chart. So in terms of what's trading, let me take a photo of this and throw some labels on it. So there was a one up and then some sort of two back. One, two, and then we went 1, 2, 3, 4, 5 into a three. Pretty clean. I mean, they come back and they spike, the 1, 4. They spike it, but it seems to act as support. And then there was some sort of ABC down into a 4. And this was the long from lows, this yellow 50% retracement. And since then, we've had a 1, a 2, a 3. 1, 2, 3. And then we had a highs to highs extension drawn from this one to this high. This is the 236 target of the long from lows. We ticked into it right there. We came back. No doubt we dipped into this extension intraday. How many points was that? 37, about 25 points. And then they retested it right there. So, I mean, that was a tough move, but the retest was buyable. And so, oops, where did that photo go? Here. And so what seems to have happened is maybe some sort of 3 down, 3 up, 3 down, so a sideways wave 4. And again, this highs to highs extension off the top of wave 1 held. It dipped in this time and it held clean here, and we just wicked under the channel here in the morning, or when was that? Before the Fed. It was like the 11 or 12 a.m. bar. And then we ripped. And we went straight to this 236 target of this extension. And so we may have off of this high right here a new highs to highs extension that we have to watch. And so backing out on the daily chart here, we have targets above. We have this 618 target here of the highs to highs extension, and we have this 618 target of the long from lows. And then the resistance zone is going to be somewhere around this prior high up here. Nothing says we have to get there. We could exceed that high, actually. We could get up into the 4,300 somewhere. But if we go through these 618 targets, I don't know. This is going to be the chart to watch, the weekly log scale chart, to see if we get a weekly close above there, something that looks like a back test, and then something that looks like continuation. That is going to be the trap if past history is any indication. And you don't want to buy into the narrative that the bull market is back and the Fed pivot is going to solve everyone's problems. Um, I'm sort of concerned at how much conviction I have around this, and I am concerned that there seems to be a consensus that the market is going to roll over in Q1 or Q2 of next year. But this is just, you know, the tactic is going to be to short weekly candles that look like highs after a back test of this supposedly broken channel. That would seem to be the game. That's the simple point of this video, is don't fall for the breakout and back test scenario, because history shows quite clearly that that is a trap. And that in the case of 2000, the market didn't actually roll over until March. So this could be a nasty process where you think you're in the trade and then you get taken out, so you have to stick with it. Um, is that everything I wanted to talk about on the weekly or the hourly chart? Yeah. So again, on the daily chart, 618 targets on the daily chart. North of 618 targets is a great time to start thinking about getting short again, and around this prior pivot right here. And I think that's it. All right, thanks guys.